Okay, well, I'm sitting in an airport lounge recording this, so there'll be a little bit of background noise, and this is a small experiment to see if I can do this on the go. So I'll be returning home in the next number of hours, but I wanted to get this out as soon as possible. So what we've got on the screen here is the euro, and I've just drawn two horizontal lines in here illustrating the sort of trading conditions we had during last week, and you can see that we were stuck in this range, a pretty tight range between 1.103 and 1.096 or 7. So pretty tight range really, revolving around a center point of this 1.1 level, and just ups and downs. And as I said in the previous video, we traded from the bottom up and from the top down, moving stops to break even. On occasion we took some profit, but not very much, so it was a very busy week, but without any real significant profit. I think around, I just had a look at some details, around about 82 or 83 pips for the entire week after all of that work. So once again, please excuse the background noise. So what is the strategy for the forthcoming week? Well, in around about, well, it's 1400, so in about 8 or 9 hours time we'll be starting the Asian session. And what I'm actually looking for, and I haven't done this strategy with you before, is a breakout of a range. That's why I put these two lines in. You can see the lower line at about 0966, the upper line at 103, thereabouts. And as I said, straddling this 1.1 midpoint, which is a very significant number, and also the 200 period moving average, so up and down either side of it. And what I expect is that we'll break out of this range early in this coming week. And what that means is that whichever way we happen to break out is the way that the market is going to tend to trade. Also notice, as I said, we're in this range. We're also in between the two Bollinger Bands, so right in the middle of the two Bollinger Bands, straddling the 1.1 level, straddling the 200 MA. So a genuine range trade situation during last week. So what we're going to do is try and trade breakouts, and this is a new strategy. And the moment we break out and close on an hourly basis, either below this line at the bottom here or above this line at the top. So we're looking for an hourly move through one of these lines, and then a close either below this one or a close above that one, and that'll be our trade entry price, wherever that hour candle happens to close. And it should happen pretty soon, at the beginning of the week, so either in the Asian session later on, or perhaps going into the Monday European session. So the moment we get a close above this line or below that line, an hourly close with an hourly candle, we'll look to trade either short or long, and we'll be aiming for about 100 pips with about a 30 pip stop loss. So that's the euro, and we've got a pretty similar situation on the pound. And let's just switch across to there. So here we are on the pound, and I haven't set this one up just yet, so what I'm going to do is actually get rid of this Fibonacci analysis here, because it's of no use at the moment, and I'm going to draw some horizontal lines just around about the lows there, and I've got one at the highs over there already. So you can see that line at the top not only touches the highs of this area, a little bit of a false breakout there with an hourly close above the line, but it didn't last, but it also touches these highs along here. So that's a good resistance line. This is a good support line, and we've got support all through that area, support there and there. So again, we'll be looking to trade a breakout, similar strategy to the euro, breakout beneath the lower line or above the upper line. In fact, we might move this line a little higher just to incorporate those highs. So breakout above there with an hourly close, and we'd be looking to either trade long or trade short with a 30 pip stop loss thereabouts. We'll have to determine that more carefully once we get the candles and have a look at the price action at those times. and then for a move either down on breakout below support down to around about this Bollinger Band, about 100 pips or so, or move right back up to the top here, to the top Bollinger Band, and perhaps even further. So 30 pip stop loss, 100 pip target either side, and the trigger for the trade will be a breakout and an hourly close either above or below. So that's the strategy for the beginning of this week, start of the Asian session and into the European session, and I expect we'll see one of those two things happening, breakout higher or breakout lower on both currencies very early on in the game. So as I said, either the Asian session or into the European session on Monday. So that's it. Good luck, and I'll update as and when we get into a trade. So remember, you can watch these trades live with live alerts, instant alerts if you go across to the Twitter feed, and you don't have to wait for the YouTube videos to come out. You can follow them on Twitter as they occur. I'll speak to you soon.